Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, how you going? Welcome to the podcast. Thanks for joining us today as we navigate property investment. And what I'm seeing is property investors right across Australia coming out of the woodwork. Everyone talks about low stock on market. Maybe it's not necessarily not a lot of stock on market. I think there's a lot more buyers in the market, and a lot of them are first home buyers, whether it's buying their first home to live in or as an investment property. A lot of Australians, more Australians, I think, is getting attracted to property as an asset class. And you don't need to think about COVID-19, some of the fluctuations some people saw in their super funds, let alone their personal investments, the volatility of that market. And I don't want this to be in a stocks and shares versus property discussion, but a lot of investors see merit in balancing out their portfolio by having some exposure or a lot of exposure to residential property or commercial property. And these are the sort of conversations we have on the Smart Property Investment Show. The chats I like having with investors right across the nation at all different levels of maturity, both in, I guess, age, but investment journey as they create wealth through property. These are the chats which form the backbone of Smart Property Investment Show and the website, smartpropertyinvestment.com.au, and what everyone seems to like. So I try and make sure we get plenty of them. Today's going to be one of them. In the studio with me, Allisha Sim, relatively young, first-time property buyer. We're going to hear her story, what works, what hasn't worked, what she wants to do, what the future holds, and whether or not she's going to be a property bazillionaire one day. And I say that in jest. Most of the stories you see on mainstream media is young people making gazillions in property is not necessarily always the truth. So we'll see what Allisha's story is. Allisha, how you going? You well?
I'm good, thank you. Yeah.
Thanks for joining us over the magic and the power of the Zoom. Whereabouts are you recording from today? Where are you at?
I'm recording from my living room at the moment.
Okay. Is this the living room of the house or property that you bought? Or
No, so we rent this property at the moment. The property that we bought is in Brisbane.
Okay. So you rent where you live and you've invested in an area where it probably makes sense investing.
Yeah, definitely.
Okay.
Yeah, we didn't know where we wanted to live, so we decided to rent instead.
So that's not the traditional journey for a lot of people. Why have you gone down that particular pathway?
For us, it was, we're based in Sydney and we're not too sure if Sydney is where we want to be. And we didn't find any places in Sydney that we liked or places that we wanted to live long term. And my partner is definitely in the idea that we want to get out of Sydney at some point. And in terms of when we were looking to buy, buying something was always on my agenda. And once we started looking, and we were always, because we were quite young and they were talking about the first time buyer's grant and everything. And it just didn't feel right for us because we didn't want to buy a brand new property. We didn't want to buy something out of the middle of nowhere and have a really long commute into the city. And we both kind of work in the city areas. So we were kind of working out like where we could buy, where we could actually afford, and then be able to still have that kind of city lifestyle, but not be stuck in the city either if we decide to move later on. So
you shared about we. So this is a partnership journey that you're in investing in property. Who is the we?
My partner, Michael.
Okay. All right. So Allisha and Michael, and your first time investing, you mentioned you're quite young. How old are you? It's a bad question to ask a lady. But
I was 28 when I first bought it.
Okay, cool. And so a catalyst for you guys to buy a property in Brisbane was that you weren't yet ready to put all your money into the city market because you didn't actually know where you wanted to go.
Yep.
Why, as sort of a level above that, why property for you? Why are you investing in property? What's the sort of long-term goal?
I actually did look into both property and shares, and I read a lot of books and I kind of looked at the pros and cons of both. And the idea of shares did sound easier, I guess, than the idea of you could just buy shares and put money into something or something like ETFs. But I know people in property and I have the people that have experience in property, and that's what pushed me into property, I think. If I didn't have people that I think really knew the industries and were able to give me good advice, I don't know if I would have done it. And I think having that good team really was like, okay, I know these people are going to treat me well and push me in the right directions, and I'll have a good team behind me.
So knowing people in property help shape your view or perception towards it. Do you think that is, it's obviously a positive force, but potentially a negative force in that you think you can just emulate what they've done and you think investing in property is easy? How do you sort of balance that?
I read a lot of books about property investing and it definitely did not sound easy to me. Just trying to understand all the different, strategies you could go with. Then there's people buying multiple properties at once and then not paying a cent of it off and then selling parts of it off, or you do the sit and kind of buy a couple and then you sit on them. And I guess it was more just finding the right strategy that was going to fit into something that we could actually achieve. And I think trying not to bombard yourself with too much of these crazy stories about people going crazy successful when it's not always possible to do that. But for us, to me, I just did a lot of research myself. I didn't want to go to these experts and be like, I have no idea what I'm doing. And I wanted to come with a bit of knowledge myself and just kind of understand what I was doing, just to make sure they were actually giving me the right information.
So you're still relatively new to this property investment sort of space, and and we'll talk about what the future holds for you. But so tell me, how would you crystallize your strategy to someone who isn't familiar with property investment? What's a very simple way to explain the way you are approaching property investment today? And as, I guess an extension to that, do you think that'll change at all?
It possibly could change. But at the moment, we're just buying assets that we can sit on and hold for a long period of time. We basically just want to keep something that we can have a really comfortable kind of, and like a retirement. We're not looking to get billions and billions and billions of dollars. We just kind of want something that's going to really sustain us in the long run.
And how important for you, there's a couple of dynamics of property that sort of shape investment strategy. One is capital growth, so you want the thing to go up in value. Another one is yield, so cash flow, so putting money into your back pocket. So sometimes that's maybe negative geared properties might go up in value more, whereas positively geared might not go up in value as much. However, put money in your back pocket to support other initiatives. Where are you sitting with that? Do you need sort of high performing properties to supplement your income?
With our first
more
one.
yield.
So
and is that because you've got time?
So we've got time, and the place that we bought is pretty much directly on the Brisbane River. It's a 2-bedroom unit on the Brisbane River where potential future development opportunities. So I was basically looking at the future of what could possibly that property could be, being in I think it's only 10 minutes or so from the city in Hamilton. So it's a really good location. But basically, we have a lot of goals that we've also wanted to do. So the process of getting married, so we wanted to save up for a wedding. We've also got a few other things we wanted to save up for. So we wanted a property that we weren't going to feel the loss of any type of cash. So it basically sustains itself. It's neutral to positively geared at the moment, and we don't really feel it. I get the bill every now and then for the council rates and the water rates and everything like that, and I just pay it. I know it's all fine, and it doesn't dig into the rest of our money.
And does that give you sort of peace of mind? It
does, yeah.
You're still young and you want to achieve other things. You said you're getting married, and they're not cheap affairs.
Definitely not.
So I guess while we're at it, let's have a chat about the actual property you purchased. So there's only one property in the portfolio at the moment?
Just one,
correct?
Yeah.
Okay. And you purchased it when?
The 5th of Feb last year, so it's almost been a full year that we've had it.
Okay, 5th of Feb, yeah, nearly a full year. And Hamilton, which is a suburb of Brisbane, not far from the CBD. And it's a unit, 2-bedroom unit?
2-bedroom unit, 1 car space.
Okay. Have you actually seen it?
We actually went on a holiday out there and we just happened to drive past it, but we haven't really seen inside.
Okay. And how much did you pay?
300,000.
Okay, 300,000. Yeah, it's a fair chunk of money. And what sort of deposit did you have?
We had about 50 grand, I think.
Okay.
12% deposit. Yeah. And the rest was everything else.
So did you have to pay lender's mortgage insurance
Yes, we did.
on it? Okay. So can you explain that for our listeners who might not be familiar with it? Most people think you need 20% deposit in order to get a property. So at $300,000, that would be $60,000 plus stamp duty, plus all your legal costs, et cetera. So all up, you're probably in for, they reckon about another 16% on top of that. So call it 70-something grand, your 12% deposit, but lender's mortgage insurance. Tell us about it.
Yeah, well, I was speaking to a buyer's agent, and I pretty much thought they were going to tell me, I just wanted to speak to them, this is what we've got, this is what we think you're doing. And I was expecting him to be like, okay, come back to me in a year or two, you don't have enough money. And he called me, he's like, yeah, let's do it. We'll buy something within the next 3-4 months. And I just was like, whoa, okay. I wasn't quite ready for that. But yeah, he's like, you've got enough if we just do 10 to 12%. And the lender's mortgage insurance only ended up being an extra maybe $4,000 on top of our loan. So it wasn't worth waiting another 2 years to get that, 75 grand to pay the 20% and everything like that. So then make it worthwhile. So we just paid the lender's mortgage insurance and then did it as soon as we could.
That's a really good point you make. So lender's mortgage insurance, or LMI, it's an insurance paid by the borrower to the lender should you default on the loan because it's over 20%, and the fact that if you didn't buy well enough and you've only financed 70%, that what you sell the property for might be less than what the debt is. So it sort of protects them against it. So a lot of people think that's a different sort of insurance. That's the way it works. So it protects the lender on higher LVR loans. But what you said is a really important point. So you paid about $4,000 or something or other you said for LMI.
Yeah.
Now, if you think about how much a market can move in a period of 12 months, let alone 24 months, that it was probably even taking you longer that to save a 20% deposit, the $4,000 pales in insignificance when you look at that capital growth.
Yeah, definitely. And that's kind of what we thought as well. So I was surprised when they're like, yeah, let's do it now. And I'm just like, oh, okay, let's buy a place now.
Happy days. So I want to have a chat to you about how you actually got together the deposit. We'll just go to break beforehand, back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show, with first-time investor Allisha Sim. Rents in Sydney, bought her first property in Hamilton in Brisbane, which I think Brisbane's going to go gangbusters, is the people I'm chatting to over this next period of time. What are you hearing about Brisbane? Prices are going to go up?
I hope so. I hope it's going to go up.
Do you actually keep connected with it? Like, are you sitting there sort of sitting on your knees every night praying for capital growth in Brisbane? Or
no, I don't even really think about capital growth at the moment. I'm just waiting. I think it's only been a year. It doesn't bother me at the moment.
So why this particular property? Why did you say, yeah, that sounds right for us? Was it, no doubt, the fact cash flow to put it into a neutral or positively geared position is one thing, but what do you know about Hamilton? What's your thoughts on how that's going to progress over the next period of time?
Yeah, when we did have a quick look around it, the places in the area, the houses in that suburb, they're like mansions, they're huge. And I think it was the medium house price was in the millions. It was a very, very affluent suburb. And I think it's very desirable as well. So I think that also was a push to, and it's in such a good location, being like 10 minutes from the city, that I felt like it was always going to be a suburb that people would want to go and live in. Okay. And also the place that we bought being rented, the original renter decided he wanted to stay on with the property too. So we didn't even have to go find a new renter. He wanted to stay. So that made it easier as well.
And that person's still there?
Yeah, he said he wants to die there. So I don't think he's going to go anytime soon.
Really?
Yeah.
How much rent are you getting?
$325.
Okay, that's not too bad. $325. Yeah. And have you sort of jacked that up over any period of time, or you're happy with?
Not yet.
He wants to die there. On that basis, then how are you going to increase the cash flow, the yield on that? Should someone be potentially institutionalised in that property?
I don't know yet. We'll have to work that out. We've got really good property managers, so hopefully they'll be able to help us out when it gets to that point. We were a little bit scared to up the rent just because of COVID and all those people asking for shorter rent decreases and things like that. We were like, let's just keep it the same and hope he just wants to stay and ride it out for a year and make sure it's all good.
So you haven't had a day empty in the property?
No.
That's good. That's cool. So how'd you sort of pony up the cash to invest in this particular property? I can't remember how much cash did you need to outlay at a 12% lending plus all the other stuff?
About 45 to 50 around there.
Okay. 45 to 50 grand. And was it hard for you to sort of raise that sort of capital?
It was. It was hard.
How long did it take you to do it? How did you do it?
I don't remember how long it took. Maybe about 2.5, 3 years, I think it was, to do it, because I was traveling as well at the same time. So I kind of wasn't 100% fully committed. And then once I got my partner involved and we set together a goal of exactly how much we wanted to save each, and then we were able to push it through. And we also lived with my mum for about a year or two just to really smash through and get a really good deposit, plus save for the wedding. So I said, we're not allowed to leave until we have a goal for the wedding as well. So as soon as we had that, we were like, okay, we're out. Let's go.
You're not sitting there going, let's not spend all this money on the wedding and buy another property?
I have thought of that. Yes.
Yeah.
It's definitely been, and I've had a lot of people think that it's silly for spending money on a wedding, but it's trying to balance life experiences with financial goals.
I can believe the best money I ever spent was on my wedding. It was money well spent, and I'm still enjoying it today. But in terms of saving, so you set yourself, like when you got around to it, you set yourself some pretty firm goals around saving. Was that like on a monthly basis? You imagine you get paid monthly, and your partner
I get paid monthly. He gets paid weekly, so we had to do some difference. But I just had an Excel document. I love my Excel spreadsheet, so I've got that. I'm the financial person in our relationship, so I just tell him how much to put where, and he does it.
And do you contribute the same amount?
He earns a little bit more than I do.
Okay.
So in some aspects he does. We split all the other, pretty much everything in terms of expenses and things like that. But when it comes to savings, we basically
So you contribute a similar percentage to the cause. And so how do you arrange I know I'm being nosy, but this is my job on a podcast. This is stuff that people want to hear about. So how do you go about like arranging your finances? Do you get paid into your own accounts, and then you have a shared account that you put money into as your sort of mortgage fund?
Yeah, I've read a couple different books kind of going in different directions, and I wasn't really happy with any of them. So I kind of made like a hybrid version for ourselves that fitted with what we wanted to do. So we do get paid individually into our own money and then into our own accounts. And then we transfer money, basically the bulk of our savings and any expenses we have, into our offset account. And then basically that automatically just all the bills just automatically come out direct debited whenever they need to be. And we have our own everyday account, which basically we have individually. I have mine for the month and he has his for the week.
And that's just to buy stuff with.
Yeah. And if you get past that point, then you basically, you can't dig any more money out.
And you're pretty disciplined with that?
Yeah, very, very disciplined. Yeah. We do have another savings account, which is separate, which is like our emergency provisions kind of account as well. Like if, say we have to go to a dentist or something like that, we can dig into that money too.
This sounds very orderly and responsible.
Yeah, and like
most people your age are complaining about they can't save a cent because it's so expensive to live, and they're using Afterpay for everything. Do you subscribe to all that sort of stuff?
No way. Never touch that stuff. No. I hate credit cards. Would never touch Afterpay.
So why do you think everyone's so obsessed by it then? Do you reckon, because all you hear, and this is a property investment podcast, and sometimes I cop a bit of flack, the commentary on it, from people who aren't really into property investing, where they'll always remind me how unaffordable property is in Australia, how difficult it is to be let's remember, everyone's a first-time buyer at some point in time, right? So, but certain sectors of the community, and irrespective of age, but it just seems to be more millennial, they complain about they can't get in the property market, but you're saying it can be done, right?
Yeah.
You just got to be responsible and accountable for it.
Yeah.
Yeah. So why do you think you sort of see the world a particular way? You said you sort of surround, some people, that are around sort of money. Do you think you've just inherently a bit more responsible or a little bit more focused, or is there some other sort of skill to it all?
I think it's a bit of both. I think I've seen a lot of successful people, and I guess now that I'm almost in my 30s, I was just like, I want to make sure that I don't get left behind. Mm-hmm. And I've always been quite responsible with my money. And I think just getting older, I was just like, okay, I know the basics now. I need to up my game now, and I need to do a really good job. And I think I've just kind of slowly developed and made sure I've been really, really strict with my money, and trying to slowly teach Michael to do the same thing, and teaching him about how to do all the money type of different accounts. And he doesn't have a credit card, or he never uses Afterpay or anything like that. I think he had a store card once when he was 21, and I think that's kind of bit him in the bum a couple of times. So I think he's learned his lesson. Is
he happy to outsource the financial accounts of this sort of burgeoning relationship to you? Is he sort of like, okay, you seem to know what you're doing?
I think he's happy just for someone to do it. And I'm a little bit of a control freak, so I think it's good for me that he just lets me do it.
Do you ever become like I don't know if it's a term, a moneyzilla, where you just sort of, you get a little bit too obsessed with it all, and maybe you grate a little bit?
He does tease me a little bit that I can be a little bit too full on. That's why we make sure we have, otherwise, if I was to have all our money in like one savings account, which I was looking over it, I would maybe be like, okay, so what did you spend that money on? And what did you buy here? So we always have our own money, because I don't want to be that person that kind of oversees everything. So I make sure if I don't see it, then I'm not worrying about it.
Okay. So you don't think he wastes money on stuff he doesn't necessarily need?
No, as long as the right amount of money goes into all the other accounts, he can do with whatever he wants with what's left.
He can do whatever he wants. Sounds like the basis of a great marriage there, Allisha. But hey, I just want to pick you up on something that's a bit tactical when we were speaking about saving and stuff. So before you had a mortgage, you didn't have an offset account, but you mentioned now that the way you're saving for the future, and no doubt your wedding funds are probably in the same account, you stick it into an offset account. Well, like that's a good strategy. I use offset accounts for anything I've got, like where I park cash in there and you just pay less interest on it. Why are you doing that? Who sort of explained that to you?
Just listening to all the podcasts and everything about property, and the number one thing they say was to use an offset. And if I can pay less interest on my loan, then that's the better, like more the better. So we had a split loan. Part of it was fixed and part of it was variable, which the variable section was used for the offset. And basically we're already over that variable amount now. So I'm not paying any interest on that portion of the loan.
That's pretty cool.
Yeah.
Wow, that's really impressive. So what Allisha's explaining there, and I'll use very simple numbers. If you have a loan, a variable interest loan, so not fixed because it's fixed, you've got to pay a particular amount each month, but a variable interest loan of $100,000, and then if you have an offset account connected with that has $100,000 in cash in it, it means you pay no interest whatsoever. That same account, if you've got a $100,000 loan, a variable interest rate loan with $50,000 of the offset account, you only pay the interest component on $50,000 of that. So you have your whole variable component of your mortgage offset with savings.
Yeah, at the moment we do, yeah.
Wow. That must be that changes the dollars and cents to the accounts on definitely a positively geared mortgage in that regard. So how big is the fixed component of the loan?
The fixed is $200,000 and the variable $70,000.
Okay. Do you wish you did it the other way and you have more variable now than fixed?
Yeah, now looking back at it, I kind of wish we had done more variable or more so with the offset.
Yeah. I want to chat a little bit more about financing. I'll just go to a quick break before I head back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Allisha Sim, first-time investor, chatting this journey through property and driving being, I think, the support. It's really funny, and doing like this podcast now for many years, I've met a lot of different people, different characters, and just the balance of influence in a relationship where it often sits with finances. And you often find that women are the guiding force in that regards. Is that, why do you reckon that's the case? You probably thinking more about the future, or is us blokes just
possibly, yeah. Possibly. I don't know. I think it's just, I guess, I know some women that aren't. I think it just depends what you're inherently like in your personality. And I think it's also, I guess it's good because we can talk about money very easily. And I think money is a very difficult thing for couples to talk about. And I think it's fine. It took a while to get him on board with buying a property because he kind of didn't really know much about it, and it kind of freaked him out a little bit. Freaked me out too. But once I kind of was able to understand it myself and then talk to him about it, and we'll be able to talk about the finances, and then it was a lot easier after that.
Do you think you got a good attitude to money? And by that I mean a lot of people they have challenges with their finances, or they're never really successful financially because they don't like talking about money. They think it's rude to talk about money. For some reason, there's this mother's tale or urban myth that it's rude to talk about money. And that's what I do for a living. I'm happy to talk about money. I'll ask people about money. I don't really care what people think. But you're now happy talking about money? Has there a point in time when you haven't been?
I love talking about money. I love telling people about my account structures and how we've set up things and what we do for here and there and how everything's structured and running. And I love talking about it. It's weird because I get really excited about it too. And I think that's helped us feel good about it as well because we know we're doing a good job with it. And being able to talk about it and being able to do it together, I think it's been really good. But I don't remember being able to talk about money before. So I think it's
all okay.
Yeah.
Does your peer group ever, well, number one, obviously your peer group probably know what you're doing, but they just go, shut up, Allisha. I don't want to hear about it.
I've become like the financial advisor of our friend group. People come to me for so how did you structure your accounts and things like that? So yeah, I've kind of become the financial person. Everyone comes to me for money advice these days.
Well, I think it's great. And it's one of the reasons why we do the Smart Property Investment Show is just talking about money. And a lot of people don't have the opportunities to maybe have a friend like you who they can go to and ask questions about this. And, you know, our view is that we want to democratize money. Democratize. There's no secrets around investing in property, right? It is reasonably straightforward if you've got the right counsel and the right people around you to help sort of steer you in the right direction. We were chatting about offset accounts before, and, you have to have a mortgage and you've got a split mortgage there. How much is that? 200 grand fixed and 75 variable?
Yes, that's correct.
Is that what it was? Okay. How did you get the loan? Did you get it through a mortgage broker?
Yeah, mortgage broker.
Okay. How was that experience? I
felt like getting the mortgage and doing all that was probably one of the hardest experiences of the whole process of buying a property. I don't think I realized how much paperwork was involved in the whole process of buying a property, and the different getting approval, pre-approval, and then doing the next step, and then doing the next step. And like the whole process of buying a property, I felt like it took way longer than I expected it would. It was like months of going through the whole process. It was fine. I had a really good relationship with the mortgage broker that we had, and I thought he did a really good job. But I thought it was good fun.
It's good fun. And so you're not too scarred from it. You'll do it again because
definitely.
I think using a mortgage broker is a great enabler for property investors. We chat a lot about it on smartpropertyinvestment.com.au. Go and check it out. And there's so much stuff about mortgage broking you can poke a stick at. But just to sort of conclude this chat, how are you going on the whole property management side of things? Is it pretty much set and forget? You don't have to do too much?
Yeah, pretty much. I don't really have to do much more. All I have to do is basically pay the bills when they come through, and that's about it, really. Talk to the property manager when she sends me an email, and that's all I really had to do so far. It's been pretty easy. So
you don't get your property manager to pay like water and council rates and all that sort of stuff? Do you do it yourself? I do that myself, yeah. Okay. Why is that? I don't know. It's just the way it came to me that originally, and I did ask her about it, and she said I could do it, and I just left it. I just I don't mind doing it myself to keep track of it. That's cool. I really enjoyed the chat, Allisha. Thanks for coming on and sharing your journey through property. It doesn't sound like the end of it. When's the next buy? You're getting married soon, and then what? You're going to have any money left over? Yeah, we're getting married in March, and we're planning to buy the next property at the end of this year. Okay, so no honeymoon for you guys in Europe? No, not with COVID happening. We're just doing a very small holiday after. That's good. And any idea where the next property will be? What sort of asset you're going to buy? That's kind of where our dilemma is at the moment, because we're not sure exactly what we want to do. We've been recommended by our accountant that we should possibly buy in Sydney or buy our own home next, because he didn't want us to overdo our borrowing power. He didn't want us to go over our borrowing power too much. So he thought it would be best for us to buy our own property. But we're still not sure where we want to live. So we're looking at maybe the Central Coast, somewhere like that, where it could be a potential place that we would move into, but use it as a current investment property until we were ready to possibly live there in the future. Okay. Sounds like you're speaking to some people that know what they're talking about to help you make and shape your decision-making around it. But, when you're ready to go again, let us know and come on and tell us all about it if that's cool. All right. Awesome. Thank you so much. All right. Thanks so much for your time. That's Allisha Sim, first-time investor. Go and check out. We'll write some stories up also on smartpropertyinvestment.com.au. You can find a whole bunch of stuff there around first-time investing as well. And it's a big part of smartpropertyinvestment.com.au. Hope you joined the podcast. If you want to come on and have a chat with us, we love these stories from property investors, irrespective of where they are in their journey. It's not too hard, Allisha. It's pretty straightforward to come and have a chat. It's not too scary. Pretty not too easy. Bad, no. It's all right. It's okay. Get in touch with the team. We're always looking for guests, in particular our female guests. I'm conscious that sometimes we're a little underweight. So there's a big shout out to all you female property investors out there. Come and have a chat with us. We'd really like to hear your stories. You can contact the team, editor at smartpropertyinvestment.com.au. Remember, social media, if that's how you like to get your information, Smart Property HQ is where you can find us. We'll be back again next time. Until then, bye-bye. The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.